As the price just keeps tumbling, we're going to talk about maybe the most talked about value trap out on the stock market, and that's going to be Intel.
Its second worst day ever. In fact, in more than 50 years as a public company, Intel has only had one other day worse than this, and that was in 1974.
Fundamentally, the four areas of our business, we're not changing any of those. A foundry, our client networking and data center business, those four areas. But within each one of them, we're looking at the portfolio of things and saying which ones are getting good financial return and which don't have as good a market or financial opportunity.
From last night to work, I actually do think Intel will live through this. I don't know what kind of a life they will live, but they will live through it, and here's why.
So in this video, there's a few things we're going to talk through. Number one, we're going to go over the fundamentals, replug in all of our analysis, because if you're new to the channel, Intel is a stock that gets requested a lot on my live streams. And I told people, do not buy here around $30 a share. We have to be looking below $25, $26 a share. And after this horrific earnings, we now have to go back to the drawing board and readjust everything. And by the way, if you like this type of analysis, be sure to click the like down below and consider subscribing, hit that bell, because I do go live pretty consistently, and that's where you're gonna have an opportunity to really get some Q&A in. Guys, welcome into Compounding Capital. My name is Colton, and on this channel, we talk about fundamental analysis and long-term price action. So let's talk through Intel. We're talking about the worst day in 50 years for Intel. This was a horrific earnings report, and honestly, the future is looking dim for Intel as companies like AMD and Nvidia are really taking market share away from Intel, and at this point in time, Intel is losing the game and losing it fast, reporting a big miss on earnings and now laying off 15% of its employees. The turnaround has finally started with Intel. Now, if you're new to the channel, this is a company that I said had to slash their dividend and had to really get leaner and meaner. And this was nearly a year ago that I stated this. When the stock was trading closer to $40 a share, we were kind of looking at closer to $25 a share. Now, where is it trading today? It's trading near $21 a share. And it's going to get extremely volatile because to me, there's no real positive catalyst anytime soon for Intel. Now, before we keep bashing Intel, there is some positives here. Number one, the government is relying on Intel to be a true domestic player here. They're giving them billions of dollars of government stimulus. And now the question is, if Intel doesn't execute, are they going to lose those free paychecks? And that's where the concern is definitely growing for me, as I am definitely interested in this company at these levels. The question now becomes at what price, and we're going to get into that in 1 minute, but we have to understand where they are heading. Now, if we think about Pat Gelsinger taking over Intel, it was trading right around $60 a share. It now is down roughly 64%. Now, as Intel starts building out foundry, the manufacturing side of chips, making it a domestic product, competing with companies like Taiwan Semiconductor, there's definitely something to be said about domestic production, especially with the political tension going on. But there's also a tremendous of capital expenditures taking place. They're definitely falling behind by the day when it comes down to products of chips. They're not competing in the AI sector, and AMD is now eating their lunch. We've watched top-line revenue go from nearly $80 billion of top-line revenue now down to $55 billion and going even lower. Now, mind you, this is all while we're seeing a chip boom taking place. Now, while I'm talking about a lot of negatives here, there is some positives that I really want to bring to your attention. Intel is getting a tremendous amount of government funding, $8.5 billion in government grants, and an additional $11 billion of loans. With cutting their workforce by 15% and having a $10 billion cost savings plan, I think the liquidity profile of Intel is going to be fine as long as the government stays behind them. My concern is the government usually doesn't make good decisions in investing in companies, and they might get a little bit nervous here considering that Intel is not executing and that all that money that they gave Intel could just be set on fire. Are they going to withdraw their promises to Intel? Are they going to stop funding Intel? And that's where it could get a little bit dicey here. They're suspending the dividend, which means that I think the main focus of this company is going to be really getting down that debt. And to me, that's where I think you unlocked a tremendous amount of value. I think this is a really good move, but I think it might be a little too late here. This is something they should have implemented years ago, especially when we saw Nvidia really taking the reins on AI chips. So what I want to point out in their earnings is that revenue was down to $12.8 billion, which is down 1% year over year. They lost 38 cents a share in expected third quarter GAAP EPS of negative 24 cents. So we could see that it's still going to be ugly going into next quarter. This might be one we want to start accumulating at a really discounted price in order to make sense of even taking on the risk at these levels. I think one of the biggest concerns I have with Intel is the operating margins being extremely in the negative. So now that we kind of have a blueprint of what's going on with the fundamentals, we're going to start plugging in these numbers and really working backwards here. I honestly believe that the chip demand going forward and the upgrade cycle from cell phones to computers is going to be massive, and there's going to be plenty of spillover effect. Even if Intel is not the biggest player, I still believe they're going to be one of the largest players. So I'm basically painting a picture here that in 2025, they're going to do right around $52 billion of revenue and only grow right around 2% for the next 1 to 3 years. For years 3 through 6, I have them growing 4%, and 6 through 10, I have them growing 4%. I'm basically trying to paint myself a worst case scenario with Intel at this point in time, and getting rid of the dividend is going to allow them to really focus on cleaning up the balance sheet for more research and development in the future. And so I do think that's going to be a priority here. When we incorporate all of this together, I'm getting right around a $17 to $19 ideal stock price for Intel here. I think it's going to be very volatile, and I actually think you might have an opportunity picking up at these levels. I definitely think anywhere $20 makes a lot of sense, and a break below that, we start seeing $18, $19 a share. That's where I think it becomes extremely interesting to dive into Intel and take on a little bit of risk here, because the government is backing up this company, and they might be at the point where Boeing is, where they're just kind of too big to fail, and they will be here long term. It's just going to be an ugly 3 to 5 years. Now, of course, this is just my opinion, but anytime the government is backing something up, they'll usually do everything in their power to make them succeed. Intel is investing a lot in fabs, and yes, they're behind right now, but that doesn't mean that they can't start catching up and be a competitor in the next few years. I think this AI boom is going to be a long-lasting tailwind. I think a lot of chip makers are going to do well. I think there's an opportunity for Intel to be a front runner if political tensions pick up and we have to build more domestically. If you're a person that's looking to get a quick return over the next 3 to 4 years, this is not going to be a good investment for you, in my personal opinion. I do, however, believe that if you are younger, and if you're 40 and younger, and you have 25, possibly 30 years to invest, I think this could be a pretty substantial investment long term. Now, obviously, there are other areas where you can invest in, whether it be AMD, whether it be Intel. But when we look at the cost savings that this company has and the ability to recreate free cash flow, that's where I think this gets interesting, getting that debt back down, building up substantial amounts of cash on the balance sheet, and getting a tremendous amount of government backing. If they fail, this is really on management at this point in time. They're getting a lot of bogeys here to really F things up and still succeed. As always, guys, really appreciate your time. Thanks for spending it with me. We will see you in the next one.